For the Wall Street Exclusive, I'm Joe Springer, helping you make informed decisions so you can succeed in the market. Ria asks about GoPro. What do you think about GoPro? GoPro has gotten cut in half. It's got a lot of growth. Good time to buy. What I told Ria was look at Apple, and that's what I want to tell you too. You might be surprised by this. Apple gets no respect, and I have a hard time thinking that GoPro is going to get any respect either. And I'll tell you why I have doubts about its business model going forward as well. Okay, so Amazon, LinkedIn, Twitter, Salesforce. Here are some big technology companies with big multi-billion-dollar valuations and no earnings. They lose money, those four companies, and have for a while, and they have big multi-billion-dollar valuations. eBay, a big multi-billion-dollar valuation. It has a price-to-earnings ratio over 1,000. It basically breaks even, and big valuation. Facebook only makes about $3 billion a year, valued at more than $200 billion for its market cap. It's got a PE of 75. Apple just had the most profitable quarter of any company in the history of capitalism. It made $18 billion in profit in one quarter, and that annualizes out to $72 billion a year in profits. How big is Apple's market cap? About $750 billion. That's only like a price to earnings ratio of 10 if you annualize out that quarter. It's 17.5 on a trailing 12-month basis. So wait a minute. Apple's earnings are valued at less than much less than other tech companies. Yeah, in fact, Apple's earnings are valued less than the average company in the S&P. Wait a minute. Apple is like a lower quality company than the average company in the S&P. Its earnings are valued less. The average company in the S&P trades at 19.9 times earnings. So what are Amazon, LinkedIn, Twitter, Salesforce, eBay, Facebook doing that's so special? It's more like what they're not doing. Specifically, they're not making devices. They offer business and social and personal and financial services, but they do not make devices as their primary business. Manufacturing devices to be sold into large global markets generally is a very bad business. If you're making toaster ovens and you're making them for the enormous global market, then you're basically doomed to never have big lasting profits. As soon as your profits get really good, another manufacturer can start manufacturing toaster ovens, and they can enjoy economies of scale just by capturing a real small part of the huge global market. And so then they'll move in, they'll undercut you slightly on price, and that's the beginning of the end as those great profits get competed away. If you read my piece at the Wall Street Exclusive on the Penske auto dealerships as a way to play the luxury cars, the automakers have the same trouble. As soon as they hit pay dirt, they're going to get copied, and anybody can move in and mass produce in that huge global market. And that is what's going on with Apple. That is the fear surrounding Apple. Apple always trades on its past earnings and basically gets no credit for what it might do in the future. Is that right or wrong? Well, Apple bulls will say this is not a device company. It's like a life management company. It's got all your music and your photos and your movies and your apps in one ecosystem that you can never leave. And maybe that's right. Apple bears might say, yes, you offer those things, but so can someone else like Google or Microsoft. And the fact that Apple's devices are currently selling so well may be more about current fashion or fads and not a true sustainable competitive advantage. All right, so wherever you may fall in the debate, the market does not give even Apple the benefit of the doubt when it comes to devices, which brings us to GoPro. GoPro is a device company, which, as we know, is a terrible business. And anybody can make small cameras, and in fact, everyone has a small camera in their pocket on their phone now. Okay, but that's okay. It's not a device company. It's becoming a media company, which is a terrible business. If you have a little bit of money, you cannot start your own regulated electric utility. If you have a little bit of money, you cannot jump right into the rock quarry business. You cannot jump right into developing biotech drugs, but you can jump right into the creative businesses like media companies, music labels, fashion, and clothing. There's nothing keeping you from having a media website, hosting your own content or others' content. You tell everybody, hey, film funny stuff on your phone and load it up to my site. It basically would cost you nothing to do that, and that's what GoPro is doing. So there's nothing stopping the copycats from moving in and undercutting GoPro on price and ruining its business. Even if people do like its media business, they're not going to pay to, in my opinion, that business will not make any money. So there are not a lot of regulated utilities, but there's lots and lots and lots of media companies. GoPro, in my opinion, has no moat now and will not in the future. They do have a lot of growth. They're growing revenues better than 40%, and they just got cut in half. However, insiders have sold $1 billion worth of stock in the last 3 months. This is only a $6 billion company. And it did get cut in half, but even now, its earnings are being valued at more than triple Apple's earnings. And so the businesses they're in now and the business trying to get into are both bad businesses, in my opinion. It could get cut down to Apple's earnings, and how could you really argue that it's being valued at the same, if it's being valued at the same value as Apple, you couldn't really argue too much. Is GoPro way, way better than Apple? I don't think so. So GoPro, it got cut in half, got really good growth. I wouldn't short it. It could go on to have some success, but I don't think so. I don't like the business it's in. I don't like the business it's getting into. So I say stay away from GoPro. All right, I hope you found that helpful. I'm Joe Springer for the Wall Street Exclusive, helping you make informed decisions so you can succeed in the market. Next up, I'm going to tell you what I think of the economy. I had a question about interest rates. I'm going to tell you exactly what I think of our economy going forward for this foreseeable future. And then I'm going to show you what Warren Buffett put in his will to take care of his widow, and how the very simple way he wanted her finances run. Maybe you'll think it's helpful.